Hey traders, welcome everyone to our last and final webinar of the series. I'm glad to see everyone here watching and welcome everyone who has been with us for the past weeks and perhaps the ones who are joining us today for the first time. The topic of today will be the building a trading system based on volume and order flow analysis and connecting the dots throughout the past 6 webinars. We've already done a ton of work together, and you've learned to look at the markets through the lens of the supply and demand. You've learned how to read the smart tape, the depths of market, the footprint chart, the volume profile, and now it's time to bring it all together and structure it into your own complete, consistent trading system. Here's what we will cover in today's session. First, we will be briefly reviewing the key takeaways from our previous webinars. Second, we will be breaking down the components of the robust system: entry triggers, filters, stop loss placements, profit targets, risk management, exit logics. We will be walking through the elements of the successful trading system. We will be building the successful, profitable business plan, trading plan together. And finally, we will be looking at the complete strategy example built on volume and cluster logic, as well as I will be answering your final questions. And we're going to get the answers to them. So hope you're ready to give it one last push together. This final session is where everything comes on in place. And as always, feel free to ask questions in the chat or share your thoughts as we go. Okay, so make sure that you share all your questions that you have, because this is a time to get all the necessary answers. Okay, who do we have today with us? Let me know in the chat, where are you tuning in from today? Which country are you watching us from today? And let's start simple with a plus in the chat if you can hear me and see me clearly. If you can hear me and see me clearly, please do let me know in the chat, just so I know that we can get started and dive deep into the topic of our today's last webinar. Swirls is with us. Welcome. Paul is here as well. Good to see you. Olena, доброго дня. Martin, welcome. Michael, Udo, Said, Tomek. Welcome, everyone. Welcome. Fantastic. Poland is in the house. Irene is here. Good to see you. Good to see everyone. Amazing. Awesome. A mix of all new faces I see, and many of you returning as well. Great to have all of you here. Let's dive in. First of all, before we're going to move on into our topic of today's webinar, let's make a quick recap of what we've learned so far. We've already covered a lot in the past 6 webinars, really a lot. So let's briefly walk through what we've built together step by step. On the webinar number 1, we were covering market mechanics. So we learned how the market really works through the constant auction between supply and demand. You also discovered how orders are placed and executed in the market, and got familiar with the depths of market, smart tape, and footprint charts in your ADAS platform, our primarily tools for visualizing volume. You also learned how to spot impulsive bars, where buyers or sellers dominate the tape, and you learned how to use all 3 tools combination to get powerful trading signals. In webinar number 2, we were talking about bid and ask logic and diving deep into the topic of imbalances and delta. So we explored imbalances when one side of the market clearly overweight the other in volume. You saw how footprint bars form, work, and reveal that imbalance, and how delta, buy minus sell volume, shows pressure. Positive delta shows the pressure of buyers. Negative delta tells us that sellers are stronger at the moment. And you learn how and when delta builds during the absorption, and when signal becomes stronger to take a trade. In webinar number 3, we were talking about vertical volume and the combination of it with cluster analysis. We took it further by identifying high volume levels directly on your chart, often acting as a key support resistance zones, and you learn how to analyze each candle in depth and spot cluster of large trades, which reveal the footprints of institutional players. In the 4th one, we covered one of my favorite tools, which is a volume profile. You discovered how to build a volume profile in your ADAS platform. Which different tools do you have to visualize it? You downloaded several workspaces that you can now work with for a day, or for a trading session, how to use point of control, high volume nodes, low volume nodes, a vacuum, right, to spot institutional zones. In the webinar number 5, we talked about specific entry signals using order flow analysis. So we focused on absorption, we focused on imbalance and stacked imbalance, and they gave you a specific entry confirmation, which you can use for every single market. No matter if you trade crypto, if you trade stocks, if you trade futures market, you can apply it everywhere throughout different time frames. In webinar number 6, we talked about risk management and trading psychology. We dove deep into how to calculate your risks correctly, but also in the psychological blocks that can stop us from achieving the results we want in trading. We discussed discipline, emotional management, and psychological traps, including the fear of missing out and the importance of letting trades reach their targets instead of reacting out of fear. And you discovered how your trading results reflect your relationship with uncertainty and how to change your habits for long-term improvement. All of these lessons out of the past 6 webinars are your strong foundation for success. And today we are putting it all together, building a strategy, testing it, and helping you to walk away with a clear sense of direction. Now, move on. Which topic out of all our previous webinars did you find the most valuable for yourself? Which topic was the most important? Which webinar out of all 6 was a most powerful and left the biggest impact on your trading? Put me a number in the chat. 1, 2, 3, 4, 5, 6, or of course just a topic like an order flow or risk management, emotional management, volume profile. What are your favorites and what are you going to take away with you after today's webinar is finished? Let me know in the chat. Type in the chat what you stood out the most, or maybe something that you already started applying in your trading so far. I see Tomek is saying 5, 6, great, amazing. So order flow entries and also the risk management, good to know. Said is saying all of them. Olena is saying all of them. Mario, all? Great, amazing. I see a lot of answers that most of you actually enjoyed all of the webinars, which is a really good sign for us. Gimli says also all, great. Thank you. That's the best part. And now you will be learning how to use them all together as a part of your real trading process, okay? So Martin says all but 4, 5, and 6 were the best. I am really, really glad to hear this. It means that you really got lots of value and enjoyed the past few weeks together. Amazing. So, ready? Let's build your trading system, shall we? And I want to take it from the very interesting perspective, a little bit perhaps different that you could expect. We're going to talk about what is called the business plan for traders. Now, when you talk about the business plan, what do you imagine? The business plan is usually something that a businessman or entrepreneur is creating before starting a new business, right? It determines all their varieties, it determines the research of the market, it determines the plan, the financial plan, right? The backup plans and other details. Now, when it comes to trading, unfortunately, a lot of people completely ignore what is a business plan. They completely close their eyes on this and they dive into into trading, hoping to succeed without actually a proper preparation. So when we're talking about trading, what is a business plan for the trader? Business plan for the trader is standardization and automatization of trading processes. So essentially, it's a trading algorithm which exists to save our mental energy and precious focus for what truly matters by automating what doesn't require constant attention. Right? So for us, we need to put automated processes in place, which are going to ensure that your energy, your focus goes to what matters the most and where your attention is needed the most, which is actually executing the trades and making sure you can manage them in a quality way when the trade is already running to maximize your profits and to minimize your potential losses. Every business plan consists of 2 different parts, which is behavior and which is techniques. And we're going to talk about both parts. We're going to break them down into the components. And I really, really advise you highly to take some notes. So if you don't have anything to take a note, please pull it out right now, some piece of paper and pen or pencil, just to make some notes for yourself and already make a brief of your own business plan for trading. And while you are doing this, I want to mention that we do have our Angela in the chat by the nickname of Ara. She will be helping you with your questions. If you have any technical questions regarding the platform or perhaps a question that I don't see, she will be right there to support you. So make sure that you post your questions and comments also in the chat. We are here to help you. And also, one last thing, make sure to subscribe to the Telegram of Aras, where you will be able to find all the necessary informations, updates, and the information about the next series of webinars and intensive that are coming out after we finish off this one. Okay? I would assume that everyone is ready with a pen or pencil and a piece of paper to get some notes. So we know that we have the behavioral part and we have the techniques part. And we have 5 components of business plan, which is the pre-market preparation, in-trade behavior rules when your trade is already running. What do you do? How do you behave? Third is execution process. Fourth is daily and weekly trade reviews. And 5 is the business plan optimization when it's required. Which of those 5 are the behavioral aspect and which are the technique kind of aspect? The first, the fourth, and the fifth, which is pre-market preparation, daily and weekly trade review, and business plan optimization, are the behavioral parts of the business plan. The second, then the third, so in-trade behavior rules and execution process, are the techniques. And we will talk first about behavioral aspect, and then we will cover techniques to create your powerful business plan. All right? So we will be talking about the 3 parts first, which is a pre-market preparation, daily, weekly trade reviews, and business plan optimization. And let's start, obviously, with the pre-market preparation. Now, when we talk about the trade plan, the trade system, a lot of people actually ignore majority of this. They just focus on the entry trade, how to enter the trade, eventually how to exit the trade, technical confirmations, and eventually the risk management. And maybe if the trader is really dedicated, they also include the journaling and reviewing the journal. Now, unfortunately, a lot of people completely ignore the preparation to the market. Now, how do you prepare yourself for a successful trading day? How to make yourself focused? How to make sure that you are in a good state of mind to make the right decisions? How do you prepare for the market? How do you prepare mentally? Traders also ignore in-trade behavior rules. So they focus on how to enter and exit the trade. But what if the situation is not the one that you predicted? What if the market consolidates around your entry point and you constantly get in and out of the profit? What if the price goes in the loss and starts consolidating, but not reaching your stop loss anymore, but also not reaching break even? So you're in a bigger, smaller loss, bigger, smaller loss. What are you going to do? What if the price misses your take profit by a couple of ticks and then starts reversing? Are you going to close your trade early by hand, manually? Or are you going to keep holding your trade? Are you going to trail your stop loss? If you trail your stop loss during the trade, then how do you do this? Do you do it based on the mathematics? Do you do it based on the footprint, based on the volume? What are your rules? All of these questions are usually unanswered questions that cause emotional reaction when we are in the trade because we simply don't know what to do. So a lot of people focus on only execution process, eventually daily and weekly trade reviews, but completely forget about everything else, including the business plan optimization. Let me ask you one question. Okay, let me ask you one question. Have you ever had, because I know that majority of you have traded for a while, so have you ever had the situation When you feel like you're doing exactly the same thing as you've been doing before, so your analysis didn't change, but your result changed. So before you were making profits, and now suddenly you start making losses. Have you ever had this kind of situation and you are like, I'm doing the same thing, but I'm completely losing, and I don't know what to do? Have you ever experienced that? Let me know in the chat. Because I did. I did, and that's exactly why we need to learn how to make a optimization of our business plan. Oh yes, Said says. Olena says it happened. Yeah, exactly. It happened for me as well. Martin says yes, exactly. It happened for me as well. So in fact, we need to learn how to optimize our business plan, because market is not constant. The market changes, the periods of time changes, the seasonality changes. So we also need to learn how to do that, and that's also what we're going to be covering. So all 5 parts are important, and let's dive into the first one, which is a pre-market preparation. What is a pre-market preparation? What can it be for you? The first, like, it can be, for example, something that gets you focused and moving and your blood flowing before you're gonna get on the charts. You can't believe how many traders I've seen. They wake up in the morning, one eye closed like this, and they still get on the charts and they are like, okay, I'm gonna trade immediately. They didn't wake up properly. They didn't even eat. They didn't even grab a coffee. They didn't do anything. They just wake up and immediately take the phone or the laptop and they're like, I'm going to trade. And in this state, when you are half conscious, half focused, obviously you cannot make quality decisions and profitable decisions in the long run. So the pre-market preparation needs to include something that gets your mind flowing, moving, and awakened and focused, and your blood flowing. So when you get on the charts, you are laser focused. It can be the light workout in the morning. It can be a run. It can be reading something. It can be meditation. It can be some yoga. It can be music. It can be essentially anything that works for you. Like today, we talked about like with another trader. For him, it is swimming. He swims right in the morning, and after the hard trading day, he goes to swim, which is also one of the ways to move, right? And there is a quote which goes like, "Emotion is created by motion. So when you move, you create the focus. When you move, you create the right state of mind." And find something that works for you. It doesn't need a high intensity workout if you don't like it, or it can be if you enjoy it in the morning. But it needs to be something that is going to bring you in a positive state of mind, relieve the dopamine, and make you have the focus that is required. Second is a macro background. It is absolutely crucial to stay up to date with what is happening in the back. Of course, even if you are not the hard dive macro analyst and you don't really understand 100% what is happening deep in the macroeconomics and all the numbers that are popping up, it is absolutely crucial to understand what is going to be happening today, especially if you are a scalper or intraday trader, because then you can plan out that if the news are coming out, right, then you might, for example, take your trades, take your profits and walk away, or completely not trade today, or close your trades early, or trail your stop loss. You can get prepared, but if you don't know something, you do not know how to get ready for this, to come. So the macroeconomical background, checking the economic calendar, checking the news is essentially crucial. And also besides this, right, if you want to dive deep into the macroeconomics, you also can. But at least knowing which hours per day are going to be the more volatile. We talked about this also on our webinar about vertical volume, how you can check the volatility increasing. When you can expect it to happen is also really important to know. So this needs to be a part of your pre-market preparation. It cannot be like you are in the trade and the market goes completely bananas. It goes completely wild and you're like, oh, wow, I didn't expect that to happen. Why is that happening? And then you check the calendar and you're like, okay, this is a release of the news today. That shouldn't be the case. You should be ready and know what to expect. And the last thing for a pre-market preparation is reviewing how the previous day or week closed. This is one of the things that also I always teach, I always repeat it. It helps me to build the plan for the upcoming day. And I'm going to give you a tip immediately. For those of you who watched the webinar on the volume profile, for those of you who didn't, you can watch a recording. But for those of you who did, rewatch it. And in the end of the trading day and in the end of the trading week, analyze how did the daily and the weekly candle closed compared to volume. If your weekly candle closed above the monthly point of control, above the monthly value area, using their TPO and market profile indicator in others, of course, or your daily candle closed above the weekly point of control, the weekly value area, then you will be expecting the continuation of move to the upside for the entire trading day, which automatically makes your trading work much easier. Because instead of waking up in the morning like, okay, should I sell it or should I buy it? You know that you should buy it. And then your task comes down to, I need to find the quality entry point. But you don't need to be guessing anymore which direction will be your preferred for this trading day. So this is part of my always routine, the daily routine, the weekly routine. I always check how the previous day or week closed compared to the volume profile and high volume nodes. It can be just the high volume node, it can be the point of control, it can be the value area, but I always check that. Okay, who is gonna go and try it out after today's webinar? Let me know in the chat. Who is going to go and give it a try after today's webinar? Let me know in the chat. Because it is an absolutely necessary part of my routine, and I promise it's when I'm gonna make things much easier and clearer for you. Martin says yes. Was team. Elena says yes, amazing. Thank you, great. Let us know afterwards how does it work for you. Tomek is saying already doing it. Great, amazing. And if you are doing it, that means that it's working. Paul says plus. Amazing. Thank you for the feedback, and I'm looking forward to hear your thoughts after you gave it a try. So we talked about the pre-market preparation. Let's cover the daily and weekly trade review, this boring part that all the traders don't want to do, but it is absolutely crucial to be able to do that. And what is it? Why do we do this? Well, in the end of each trading day, and let me do this. In the end of each trading day, you must log all your trades into your trading journal and analyze your performance. What mistakes did you make? What opportunities did you miss and why? What did you do good and what could have been done better? And I'm sorry to say it, but this is non-negotiable part of becoming a professional trader. You only grow by identifying your errors, your mistakes, and actively correcting them. Otherwise, you will keep repeating the same patterns day after day, month after month, because what you don't know, what you're not aware of, you cannot improve. At the end of each trading week, take it a step further. Review the entire week in detail. One effective approach is even to replay the market sessions you traded using the replay simulator in ADAS and compare your replay results and decisions to the actual trades you placed. Why is it so important? Because when you use a replay in ADAS, it gives you a non-emotional approach to the market because you're not actually trading, right? What you are doing is you are testing your trading system, which entries you would take based on your trading system. When you are really in the market, of course, the result will be different because sometimes you're going to be more emotional, sometimes you will miss the entry and so on, but it shouldn't be wildly different. Your task is to narrow as much as possible the results between the back testing you get when you replay your chart and the actual results that you have when you trade the same trading session. And you can only narrow this down and make the greatest results possible if you actually replay it every week after the week is over and find why did you miss the trades, why did you take the trade that you wouldn't normally take, what could have been done better, what was done great perhaps, and what are your AA plus setup. This is crucial, and this is the part of my routine as well. And the third and last part about the business plan behavioral aspect is an optimization of your business plan. So optimization of your business plan, we're going to be covering a little bit later, but I want you to just make a note about that for now. Waswat, I see the question. Can you show us, please, any chart? We're going to do this in the end, so please stay until the end. Dave, good to see you on our stream. Which trading journal program do you recommend? So the trading journal can be anything that you prefer. There are many of those, and the best part about it is that ADAS logs all your trades. So when you go to your ADAS statistics tabs, it's going to show you all the trades that you've taken from everywhere, from all the periods of time, and from the moment you connected to your account. So ADAS does the journaling for you. The only thing that you need to do is you need to put that effort and obviously go through the journal and go through the replay, which ADAS allows you to do, as well as the replay function, but it does journal your trades. If you want to take it differently, you can even journal it manually. I know people that journal it manually, for example, right? Or also use this journal, but also journal it in Excel file. But ADAS has it all. You just need to choose either you work with that tab or you use that tab and put it also somewhere else for analyzing it further. So now, as we cover the business plan behavioral aspect, let's talk about techniques. What are the technical aspects of our business plan? It is the in-trade behavior rules, and it is the execution process, of course. Very important part. Now, within these two, within the in-trade behavior rules and execution process, there are 4 elements which you need to have to be able to build those two, the behavioral rules while you are in the trade and execution process. The first is a trader's psychological profile. We covered it on our previous 6 webinars, once talking about risk management. So we are not going to stay here a long time, but I'm just going to quickly remind you that traders' psychological profile, the traders' psychotypes, are extremely important because they determine which approach you're going to take and which approach suits you the best. Once again, if you didn't make it to the last webinar, please make sure that you rewatch it because there are some quizzes and tests that are going to help you to identify which approach is going to be more comfortable and more profitable for you. But if you just very generalized overview of trading psychotypes, it's a scalper, it's an intraday trader, it's a swing trader, and it's positional investment trader. Each one of those has the preferred risk management, amount of trades, amount of time at the charts, and approach, which require different kind of patience, different kind of focus. And this is determined by your personality type. But I'm going to recommend you one simple thing because I assume, and based on the last quiz, we had more scalpers and intraday slash scalper traders. If you are a scalper or an intraday trader, and if you are not profitable and you're trying to get profitable, try to focus on optimally 1 trade per day. Focusing on 1 trade per day will allow you to filter out bad situations because you will only know that you have 1 shot, 1 try, and you will not be rushing the things when the first opportunity appears. But you're going to learn to ask yourself a very important question. If I would only have 1 trade per day, would I really recommend you to take a 30 days challenge for yourself and take 1 trade a day as a scalper or an intraday trader? Because it builds patience, it helps you with revenge trading, it helps you with over trading if you tend to do so, it helps you with risk management also because it's much more difficult to blow the account if you take 1 trade per day than if you take 10 trades per day, 50 trades per day, and so on, right? And it's much more easier to stay focused. Of course, as a swing trader, it's going to be more difficult because it's sometimes the opportunity doesn't present itself. And sometimes it's going to be one trade per week, but that's a different topic. For scalpers in intraday, try to give it a 30-day challenge, just 30 days. I promise you, the 30 days are going to greatly improve your performance and your results. Second, an optimal trading time frame. A lot of people don't even think about this. They're like, okay, well, I'm going to trade today on 30 minutes, on 1 hour, tomorrow on 15 minutes, and after tomorrow on 5 minutes, and the next week I'm going to trade gold on 1 minute time frame. But what is your optimal trading time frame? Which time frame do you really need to focus on? Well, your trading time frame is determined by, first of all, on your psychological profile. See point one, right? So you need to determine your psychological profile as a trader, what suits you best, and from there, find a range of time frames which might work for you. As a scalper, it can be range XV chart, for example, on Aras platform. It can be 1 minute or 5 minute time frame and footprint. As an intraday trader, it can be a 5, 15, or 30-minute time frame. For the swing trader, it can be 1 hour, 4 hours, or even daily, and so on and so on. So determining your psychological profile will help you to find the appropriate optimal time frame. Secondly, through system backtesting. So once again, you go and use the Aras replay mode to be able to find the optimal time frame for your system. While backtesting your system, compare which entries you would take. Let's say you take one period of time, you take 1 week, or you take 1 month. You replay it and you compare the results you would get during this months if you would trade on 15-minute time frame, on 30-minute time frame, or on 1 hour time frame. And you will find the time frame which is the most profitable for you, gives you the best amount of trades, maximizing your profits. And you will be able to throw off the rest. Why is it important? Because it's going to also narrow down your amount of work and amount of focus that is required. Once I know that my optimal time frame is 30-minute time frame, combination with 5-minute time frame footprint, I don't need to look at anything else. I don't need to look at hourly. I don't need to look at 1 minute. I don't need to look at something else. I know what I focus on. I know what works for me. And this is what I do every single day. It makes it much more easier to stay profitable and stay consistent. And of course, your trading time frame is going to be determined by your by selecting and backtesting the right instrument to trade, right? Because once again, you will be able to determine not only the time, not your time frame will not only depend on your psychological profile, but it's also going to depend on the instrument. Because for some instruments, 5-minute time frame is not going to work, and you're going to go to range XV charts. For some instruments, 30-minute time frame is not going to be enough, and you're going to go to 1 hour time frame. So backtest through replay on others, not only the system, but also your several instruments. Okay? Let me know in the chat which time frame do you work on right now. I'm really eager to hear this because after all, I will be able to help you also and show you some examples of trades perhaps based on your time frame. So please let me know in the chat. Okay, which time frame do you usually work with? Let us know in the chat. I'm really excited to hear more about it. I use 30-minute and 5-minute combinations, but I'm an intraday / swing trader. So what is it for you? Said is saying 1 hour and higher. Okay, great. 30-minute and 5-minute time frame combination for gold. Okay, positive says 15-minute time frame. 1 minute and 5 minutes is for the scalper. Great. 1 minute, 5 minutes, 1, 5, 30. 5 and 2. I'm trying to get towards 30. Okay. Yeah, sometimes it is going to feel like it is not a right fit for you. And perhaps 5 minutes and 2 minutes is something that works for you, Timo. Try it out, but not try it out of nowhere. Try to back test the same week on 2 minute and 5 minute and 30-minute time frame, and then compare the results. It's going to make your choice much easier when you see black and white data that this is better and this is worse, and then you will be able to make your decision. Michael says tick chart, amazing heat map. Yeah, 1 minute, 5 minute, 1 hour, and daily. This is a great approach because you are taking it from different perspective. You're evaluating all the types of situations and context from different time frames and making your decision. This is, of course, in my personal opinion, also the best approach. I know it might be overwhelming for the beginners. At least determine one profitable time frame for yourself. But Michael, I'm with you on that. Great. We have lots of different answers. If using lower time frames, yeah, 5 minutes, 1 hour, 5 minutes, great. Thank you for sharing it with me. I work on 30 plus 5. I'm going to try to show you different combinations afterwards in the practice. So let's move on to the assets. How to determine the asset and choose the right asset for you? Well, obviously through the same things we talked about before. Through system backtesting and through selecting most profitable instruments through backtesting as well. So through backtesting your system particularly, and through backtesting your assets, different assets, and seeing which one is the most profitable. Sometimes people come and they are like, okay, I want to improve my trading, but I don't know where to start. I'm saying, okay, show me your trading journal. And they're like, okay, they have multiple trades with different kind of assets. And there is one asset that they consistently lose, but once in a while they win. And improving the trading system and making it more profitable only takes stopping to trade this one particular asset that brings them losses. Sometimes it's very simple, but we just don't see it until we backtest it. So make sure that you backtest your trading system, but also why I still added this slide here in our today's training is because I want you to know that before adding a new asset to your portfolio and starting actively trading it, you absolutely should always test it. And in a simulated environment, not on the live account. Backtest your strategy on this specific asset and evaluate how well it performs under your trading system. You don't believe how many times people just start trading some kind of random asset because it looks good or because someone else is profitable on that. But let me tell you that because of someone else is profitable on that, it's not going to make you profitable on this specific asset. Maybe this asset completely doesn't work for you. That's why when someone comes to me and they're like, what is, Platinum is doing, what is NASDAQ doing today? I don't trade NASDAQ anymore. I trade S&P 500, I trade gold, I trade ERA. Or for example, what is yen future doing anymore today? Or what is crypto doing? I don't trade it because I didn't backtest it, because I don't feel like I need it, because I trade other assets and I'm good in it. It's like becoming really good in one specific thing. That's what are going to make you profitable the fastest. And fourth, from techniques, is the trading method, of course. And refining your trading method, and this is perhaps something that you should really take notes upon because this is applicable to all previous 6 webinars, is how to refine and optimize and mold your trading method. First, what is the core idea of your trading method? What is the idea? What does it include? Which trading instrument does it include? Drawing tool, indicator. What is the base and what is in the core of the trading method? And what really helped me is to create a cheat sheet for the perfect setup. I have my playbook of my trading setups, and it consists of more than 160 pages of screenshots from Ara's platform of profitable setups that I can take. And then I can take a combination of them and I can create a really good trade. I can find a really good trading opportunity. But this is something that helps you to make it easier, to structure it, and to learn how to notice these kind of situations easier. It takes some time, But this one PDF, one presentation that you are going to create for yourself is one of your most valuable assets that you are going to have. So create this cheat sheet for the perfect setup. It doesn't need to be 160 pages like for me. It can be 10 pages, it can be 15 pages, but make sure that you create it and make it as easy as you would need to explain trading for 6-year-old. And then when you open the charts and it's overwhelming amount of data, you look at this PDF and you know exactly what you are looking for, what you are searching for, what is this ID that you need to take. Secondly, key components of your trading strategy. What are the components? What is the time frame? What is the indicators? What are the confirmations? What are the key components of your trading system? Trading method is one unit. Trading system includes multiple trading methods, exit strategies, entry strategies, and so on. Third, framework for understanding the current market context. Something that is going to allow you to determine your bias. Are you bullish? Are you bearish? Or perhaps are you not trading right now? What is this that helps you to create a framework for your current market context? For me, it is a volume profile and macroeconomics. Those are two things that I look at: the volume profile on the higher time frame and the macroeconomics overall background. What is it for you? You need to decide. Fourth, criteria for a high quality trade setup. What are your criteria for the AAA plus setup? The most profitable setup, the one that is usually like the highest probability of making a win out of this whole cheat sheet that you created. Out of all the pages and all the trading methods, what is your highest quality trade setup and what is the lowest quality trade setup? So what you basically do is you first create the cheat sheet with all your trading methods, you create the strategy based on them, and you also qualify your trading setups. What is the most quality, a little less, a little less, a little less, and what is the least win rate, and it only works in a certain situation. So you qualify them and you grade them to know what is something that you can risk more upon and it happens more often, what is something that you shouldn't be risking much, but sometimes you can still take the situation because overall it's still profitable percentage. Fifth, the entry pattern and logic behind a market entry. What is your entry pattern? This is one of the parts of your component of the trading system. What is your entry entry and logic behind it every single time? So this is also something that you can create a separate cheat sheet upon, which is going to help you to determine the entry in the moment. It can be smart tape, it can be depth of market, it can be the footprint charts, it can be range XV charts on the footprint, it can be the combination of volume indicator and volume profile, for example, and cluster analysis that we talked about, or it can be the fifth webinar where we discuss several setups for entries used on order flow. Make sure to go rewatch the fifth one because this is where we discussed a clear entry rules. You can include them in your trading system. Entry timing, also something that you can back test. What are the hours per day when your most profitable entries happen? What is the time that if you enter the trade are going to be the most profitable, the most consistent? What are those times that if you enter the trade, majority of the time it's a loss? I know my times. I know that I don't enter trades in the evening. I know that I don't enter the trades in the second half of a New York session. I know that I enter the trades either after market opening, after the overnight layover, or in London session. That's it. Because based on my back testing, even if the trade looks exactly the same, it's going to have the completely different performance in the second half of a day for me, which is New York, and for example, London session. What are your times? What is your timing? Risk management rules, also something that we talked about yesterday, has to be in your trading method and your trading system. So specific risk per trade rules, daily risks, weekly risks, and everything that we talked about on the webinar number 6. And trade management algorithm, both for winning and losing trades. What are your ways to cut the losses short? What are your ways to extend the wins and maximize the profit and returns? what are those ways that you are using to make your trading performing the best as possible, and automate these decisions during the active running trade. And the last thing before we're gonna move towards a live example and your questions. So please make sure that if you have any questions, ask them in the chat. I'm gonna get back to this in a moment in our Q&A part, so make sure that you type them in the chat right now already. And I'm also gonna show you an example of how I determine my entry biases. So the trading system structure is the following, and it goes from signal to execution. First, what I do, and I'm going to show you this in a second, is I define the market context through my context filters. So I analyze the broader picture. I analyze the higher timeframes first before I make a decision to go on a lower time frame. So I create my bias based on the volume profile, so TPO and market profile indicator, as well as their withdrawing tool of the volume profile, TPO and market profile. And I use it on the high time frame to create a framework of price movement. Then, using this, I identify a key trading zone. So the first step I can do on daily time frame or weekly time frame. The second step I do on 1 hour time frame and 30-minute time frames. So I use the volume profile to identify the key trading zones and levels. What are the zones I expect the reversal from? What are the zones that are interesting for me? So my high volume nodes. Thirdly, I confirm the signal using vertical volume and delta change. So I go to the smaller time frame, 15 to 30-minute time frame, and I analyze how did the delta change over the rest of the trading day earlier, which helps me to identify either it is a control of buyers or sellers, or is it the trap. I also analyze the volume, how the volume is rising and decreasing to determine the right entry moment. Then I go on 5-minute time frame and I check the footprint. You can also check the depth of market or smart tape if this is something that you use. Or you can use a tick chart, so the heat map, or for example, the range XP charts, that whatever you prefer, whatever works best for you. You also need to calculate stop loss, take profit, and position sizes, of course. Stop loss and take profit can be based on the volume profile. And I really like to determine my profit based on the footprint as well. So I first determine my levels of interest, key trading zones based on the volume profile, and when the price approaches it, I determine based on the footprint, should I close the trade or not. So my stop loss is static, while my take profit is not static. It is defined at the moment, which allows me also to determine the high risk to reward ratio. After all, I time an entry and enter the trade based on my confirmations from the webinar number 5 and the rest of the confirmations also. I manage my position because we already have the cheat sheet, right? How to manage the position. You will have your cheat sheet how to do this. And you record and analyze the outcome, which is the element of daily and weekly system reviews. So this is our trading system structure. How we do this, what we do. This is step-by-step process of what I do every single day. So make sure that you take a screenshot of that. And remember that you can always rewatch this in previous classes, followed by your link that you received in the email to access the same webinar. So you can go back, click on the same link, and rewatch it after the webinar is over. Okay? Muhammad, I'm going to answer this immediately. Unfortunately, I do not share my playbook with trades. Because it is something that works for me. It's something that it took a lot of work, and it's also not going to work for everyone, of course. But you can create your own, and that's why I mention it, because I find it a very, very powerful part of trading routine. I do not use personally VWAP, but I know that traders use it. It is very powerful. You can also find information about it in Ara's blog. So if you go to the blog, you can search VWAP, and it's going to give you lots of different articles on how to use VWAP in your trading. So just go to aras.net and go to blog, and you will be able to find it right there. I use the volume profile to determine my daily bias, and I'm going to share it in a moment how to do this. Vaswad is saying, I would love to see you backtest in session. Can we arrange it in the future? I think we can. So make sure that you follow the Telegram of Aras and subscribe to our Telegram bot to receive all the information about the upcoming webinars and upcoming intensives. And Saeed, I cannot answer this question, unfortunately, but you do know my name and surname, so and I'm going to be hosting the rest, more webinars, of course, and others later as well. Okay, let me know if you have any other questions. Please post them in the chat if you do have any. And in the meantime, I'm going to share my screen with my Aras platform. Yep, sharing it right now. Can you please put a plus in the chat if you can see my screen? Can you please put a plus in the chat if you can see my screen? Thank you so much, Martin, Dave. Great. Thank you for confirmation. Timo, Upquill. Thank you. Kaya, great question. What data feed? I use personally Rhythmic, but that's something that you can use, choose yourself. The great thing about others is that it does not provide you with a data feed because it's absolutely unbiased on this, and you can connect your own. And you can choose what works best for you. Aras is going to just provide you with everything you need, all the tools to analyze the market, and how to connect it to your Aras platform. There is a tutorial also on Aras blog. Tomek is asking, what do you think about not setting a bias before trading and just going where the market takes you? To be quite honest with you, I do not like this approach for one simple reason, because I obviously don't know what's happening, and I'm working half in the blind. And if I don't know what to expect, I don't have the bias, then I'm gonna be I'm gonna have a bias anyway. You cannot be unbiased when taking the decision, right? I need to determine my bias ahead of time, because instead, otherwise, I'm gonna be biased at the moment of price movement, which right now the price can be going up, but in a second it might reverse. And if I don't set a bias, I might not anticipate this reversal, and I'm going to take many more losses. So Tomek, I don't do this. If it approach works for you, great. I think creating a bias and building your bias, so at least the direction you want to take it today, is crucial for me personally. Okay, let's have a look at the charts. And if you have any other questions, please post them in the chat. In the meantime, I'm going to switch to the daily time frame. And this is the GC. So this is a gold futures. 1 second. There we go. This is our gold futures. And I'm not going to load the rest of the data because it's just going to take some time. So we will only work with the current data, so to make sure that it's not loading too long. Now, what is my bias, right? How do I determine the bias on the daily time frame? Aras has their market profile and TPO drawing tool, which is not even an indicator, but the drawing tool. And this is a great way to identify the key support and resistance zones, as well as the bias for the day. Let me show you how. I take the market profile and TPO, and I'm going to place my volume profile on this whole move to the upside, which is going to show me where were my biggest high volume zones, where was my value area high and low, where was my point of control, and where is the price now related to the volume. So what I do is I place it from the lowest swing low to the highest high. And I'm going to be able to see several high volume nodes. So what I do immediately, I highlight them using the horizontal zone. One high volume zone is here. One high volume zone is here. And one high volume zone is right here. What can we see? If I wouldn't be looking at this and I wouldn't be biased on the fact that here is a high volume node and the price might reverse, which is doing, I would be selling gold today because it's quite obvious, right? We are in the downtrend. We broke the previous support. The previous candle closed strongly bearish. So I would be selling it without anticipating the reversal. How would it end for me? Well, it would end as a loss. As simple as that. Now, knowing that right here I have the high volume node, which is reversal point for gold, allowed me today to take a buy for gold, which has worked out great, as you can see, because it started moving to the upside after all. I even took 2 buys on gold today. And this is why I'm sharing this chart with you, to show you a real life example as well, right? So I first determine it using the market profile and TPO. What you can also do is you can go to the indicators, and this is also helps me to determine it, is you also search for the market profile and TPO indicator, because before we use the drawing tool, now the indicator. And I'm going to set it to the monthly time frame. Here, I'm going to change my profile color to lighter gray, a little darker gray perhaps, and a little more transparent right here. And I'm going to go and I'm going to adjust my maximum level point of control to, let's say, blue. Delete the text. And we are going to go change it to cumulative values to height. And all the way on top, we are going to unclick the draw above the price like this. What can I see here? I can see now that over the past months of April, if you look at it, this is the past months of April volume profile, because we are in the monthly time frame, and this is May currently forming, this is April. We had the value area low right here, which is an exactly confirmation also together aligning with a high volume node. We know that value area low from the webinar number 5 can act as a support, right? So we are analyzing it, and we know that this is potentially a reversal point. The other things that I can see is that right here is my value area low of months of May, and right here is the point of control of months of May, right? So let's type it. This is the May point of control, and this is May value area low. So now I know I was taking a buy from here and I already closed it. Why? Because right here is my other zone that I need to watch out for. My value area low and May point of control, which may act now as a resistance for the price. So I know my bias. I know I was long until this. I'm short from here. This is my bias. I'm going to be looking for a short. I identified my key zones or reversal zones and important zones. Now I can go and I can switch to, for example, 1 hour time frame. Let's have a look at here at 1 hour time frame. The first thing I'm going to look at is I'm going to look at how the volumes were distributed on this whole move to the downside, to also create my bias and perhaps add some important zones that I might not see otherwise. So I'm going to take my market profile and TPR. I'm going to place it from the high point to the low point. And I'm going to also identify that this zone not only was it here, but also a little higher. So I'm going to extend the zone like this. I'm going to also find the point of control and the value area high and low of this specific consolidation, because it's a high volume node for me. And this is also an important volume accumulation zone. So what I'm going to do, I'm going to change value areas to line. Right here, we can see one and second one. So all of this, we see value area low of May, value area of this consolidation, May point of control of consolidation, value area high. So definitely this zone is screaming sell. I'm going to reverse from here. But I need the more confirmation. I'm not going to just sell because obviously the zone is quite wide. So I need more. I need something more. And what I'm going to do, I'm going to go to 30-minute time frame. On the 30-minute time frame, I'm going to also check out how the volumes were distributed on the move to the upside. So I'm going to take the same exact in the instrument and I'm going to place it here. We will see the point of control is here. The volume profile is quite thin, so the volumes are quite balanced. Someone was asking the great question. Let me pull it up. Do you include CVD divergence? Yes. You can also look at the cumulative delta divergence as well as an open interest for determination of your zones and strengths of move. I love cumulative delta and I use it on the 5-minute time frame and the divergence from this as well. So right now we know the zones and I set it up, right? I highlighted all of this. I can also go, and what I like to do, I like to add several market profile indicators. So I'm going to add another one. And I'm going to add a weekly one. Just to show you that this is an important zone as well. So we need to watch out for this one. And on the daily, which the point of control is, on the daily, we will see that we had quite an important zone higher here. So preferably, of course, we have the majority of the volume here. So this is where I want the price to go. So I know that my preference is for the price to reach a little bit higher here before I'm going to take my sell. But let's have a look. Now, as we know the bias that we were long, now looking for a short but not confirmation yet. We determine the important zones of the volume where we need to also watch out for. We also can use different other indicators, like for example, margin zones are really, really good. Cluster search analysis, amazing. For example, the cumulative delta, the open interest, so many tools and apps that you can use. And there are different articles on blogs and all of the other intensive that we're going to be hosting. So make sure that you stay tuned. But my task now is to show you how you can create the system based on what we already covered, right? So we know this. Now I'm also going to add the volume indicator here, just a normal one. And I'm going to use a filter. And we are going to make a filter to filter out and important and quite high volumes here for gold. So what I filtered out is 20,000 contracts in one candle. And we see that we had this one candle with a 20,000 contracts. What I'm going to do, I'm going to use my market profile and TPO to find out where exactly in this candle this volume was traded. I will find out that the point of control of it is 3205.6. which is, as we can see, the price reacted on it here, and even here. It broke through it, it retested it. This is extremely important because I know that in this candle, we had a very significant volume traded. And now I know that I shouldn't be entering short yet because we just broke the point of control of this high volume candle. And the price is most likely going to continue to the upside from here. So this allows me to say, hey, this is a bad entry yet. I'm not going to be taking it yet. Great. That's an important information. We go on 5-minute time frame. I'm going to close off this. And on 5-minute time frame, I'm going to use my footprint charts to determine my entry. And for my footprint, I'm going to change the settings to the ones that we are used to before, the ones that we talked about earlier, which is the bid and ask delta colored, or you can change it to bid and ask volume profile, for example, to determine the entry based on the absorption that we covered in the webinar number 5. And I'm going to go to my settings, I'm gonna go to cluster settings. You don't need to do it because you already have the workspace created even for you. Remember that you could download the workspace from our previous webinars in the description of the video. I'm gonna change a couple of things here, and I'm gonna enable our favorite imbalances. 1, 2. We're gonna set 300 imbalance rate. I'm gonna ignore zero values. Oops. And the last things that we are gonna do on the 5-minute time frame for today is we're gonna go to indicators and we're gonna get, guess what? The stacked imbalance. Right? I'm gonna do this, stacked imbalance. Great. And if the stack imbalance appears, I'm also going to be using it as an entry. You can also add the cumulative delta volume here. You can add, you can check the open interest and so many other things. But what I know now is we shouldn't be entering sell yet, although the price has reached our level because we just broke an important point of control. We are looking at the price to go slightly higher before we're going to take an entry. And when the price approaches high levels, what I'm going to do, I'm going to look at my footprint charts. I'm going to wait for absorption. I'm going to wait for stacked imbalances. I'm going to wait for their high delta numbers, negative deltas, entering based on, for example, the activity, aggressive activity of sellers or absorption of buyers and everything that we talked in the beginning. So I go like this. I create, let's bring it back. I create the context based on the volume profile and volume profile indicators. I identify the key trading zones. I confirm the signal using the vertical volume or invalidate the signal. As for this example, the Brazilian vertical volume allowed me to not enter the bad trade. You can also use the delta change for it. I check the footprint. You can also check the depth of market smart tape to time an entry. When the entry comes, I'm going to calculate my stop loss and take profit zone and position size. You can also use my entry for the entry and for stop loss, the webinar number 5. I'm going to enter only during the times which are profitable for me, so only during London session or after the overnight layover. I'm going to manage my positions based on the footprint charts. And when the position is over, I'm going to record and analyze the outcome. Let me know in the chat if that was there useful for you. And let me go to the questions. Justin says, very unfortunate, this is the first time I joined your live stream. Will there be 7 webinars? Okay. I want to watch it all back. The recordings, yes, the recordings are available through the same link you receive on your email. So you can always rewatch them as many times as you prefer. All 7 webinars. If you can't find an access to this, please message our support for us, and they are very glad we're gonna be helping you with that. How to compare key levels on futures and spot when you trade prop accounts? I have several questions of this. So I do trade accounts both on futures and CFDs. And how do you compare? I just find the zones, and I mark up the same zones on my CFD chart. So I always use ATAS to identify my key zones. I time an entry using ATAS, and then I press market execution on CFD and futures. I identify the stop loss and take profit sizes and tick size on my futures, and I use the same size of stop loss based on my CFD and Forex. So it comes down to visually comparing the levels. So for example, if this is where my point of control is, and I need to watch out for this zone, then I'm going to know that it's approximately 1/3 of 5-minute candle where my point of control is. And then I know that this is approximately 1/3 of 5-minute candle on the CFD chart. So it's simply visually. I know it can sound confusing, but I've been trading like this for 4 years. I've been trading both futures and CFDs, and trust me, you can do this. This is why I use ATAS, because it's a very reliable data. It's a very reliable instrument, and I use them for trading all the assets. So make sure that you just learn visually how to identify where is the level located, and then it's use those levels. Alex, my A++ setup is when my volume profile aligns, my weekly, my monthly volume profile aligns, when I have the volume only on one side, so the price is either under the volume or above the high volume. So that this is my AA plus setup, and then footprint confirmation. For example, now with gold, it's not my AA plus setup, A plus plus. Why? Because it is between the volumes. So it's between the high volume and the lower volume that it just broke on the volume indicator. And this is why I'm staying away from it. I'm not taking the trade because I want to be 100% sure that volume is only on one side, and it is gonna act as a support or resistance, but not altogether. Andreas, CFD brokers don't provide you this centralized data, so it's impossible to have the reliable data when you trade CFD, because when you trade CFD, you only get the information from one specific broker, and it doesn't reflect or the full image and visualize the full picture of how their market participants act. That's why ARAS doesn't work with them, because ARAS works with futures, which is a centralized, reliable data where you can see all orders of all the market participants. If I enter now or buy, you will be able to see my buy calculated in all the total amount of volumes, asks, and bids. And I don't have time to wait and observe the footprint. Said, you don't need to. As far as I remember, you are more of a swing trader. So footprint is for time and entry. You will just need to use a little bit bigger stop loss, perhaps. And also you can use other things. You can still use cumulative volume data, delta. You can still use the indicator of stacked imbalance because it's going to automatically mark it up for you. You can still use the volume profile, market profile, TPO, and volumes. And footprint is not necessary. It's just for time in entry. It was really good for scalpers. It's really good for making your stop loss smaller, so narrowing it down and extending the TP. But if you don't have time for this, you can use all the rest and still stack the balance indicator without the footprint itself. Your risk to reward is determined by your actions, and using the same exact system and the same exact confirmations will be having different risk to reward and win rate for different traders. Some traders using the same strategy are going to have 50% win rate, some are going to have 90% win rate. But if 60% win rate is not enough for you, then you didn't watch the previous webinar, because I literally broke down how you can be profitable, extremely profitable, with having an edge, which is 60% win rate. Michal, the iceberg orders are the pending orders. They are not hidden. They cannot be hidden. And it is visible on the depths of market. So if you pull out the depths of market and you rewatch the first webinar out of all theories, it will show you the whole bunch of limit orders on one level. This is an iceberg, but it might be removed when the price gets there. So be really how to say it, be careful when the price gets there, because it can be removed. I don't trade from the iceberg orders. I trade towards the iceberg orders. This is something that we covered earlier today. The time frame is determined based on your personality type and determined based on the asset that you trade and the system that you use. I personally use the time frames that I just used as an example. So the daily, weekly time frame to determine the bias and the high interest zones, the 30-minute time frame and 1 hour time frame eventually to determining the zones and confirming them, as well as for the volume and delta change. And I use 5-minute time frame for the footprint, but it might be different for you. Yes, exactly. Iceberg order can cause an absorption when the price gets there. Yes. I don't use a big trades indicator myself, but you can use it if it works for you within your trading system. Yes, others has the replay mode, which you can use to backtest your strategy and the system. I used to use Fibonacci, and sometimes I do use the Fibonacci, but that's approximately it. So I find the volume zones more reliable than simple support and resistance zones. The volume zones are support and resistance zones, but with a reasoning behind it. So it gives you actually the idea of why is it support and resistance zone, why is the price reacting there, instead of just having the zone of where the price reacted before. So I feel like in that naked technical analysis, there is not enough context for me behind it. Whether it's if I look at the volume and the order flow, it gives me the complete picture of why what is happening. Let me see if I didn't miss the questions. I don't seem like I missed it. Upquill, if the whole perspective is to be right in your trading idea, you will probably find it very difficult long term, because being right in the market usually is not the easiest and sustainable. So the price can react in the low volume node. It can. There is a method based on imbalances, but not the footprint imbalances, but the balances within the smart money, within the big candle, and they base their entry based on the imbalance. And sometimes it works out. I don't enter from the imbalances. I personally enter from the high volume node, because if you remember our first webinar, and we talked about this in the first and second webinar. So if you didn't watch it, please rewatch it again. We talked about the market auction theory and how the limit orders and the high volume node create the zone where the price reacts from. Where there's a low volume node, price usually just jumps from, unless there is a big trader who steps in and starts reversing the market. There is always can be that big market participant steps in and starts reversing the price in the low volume node, but there is much lower confirmation of it and possibility than if you wait for the high volume node and where is already the big wall of orders that might stop the price. Yes, fantastic. So if you watch the first and second, it's there. You still see the market auction and depths of market, how we broke it down and how the price and why it is reacting on the high volume nodes. On the low volumes, again, it can always happen, but the probability, the win rate and confirmation of it is going to be much, much lower. Paul, this is going to be in the next webinars, not in this one anymore. Unfortunately, we don't have time for this for now. But if you go through the blog poll of Ares, they will have their articles on CVDs. What do they signal for you? Just a level of interest. Michael, it was actually also in our webinar number 5, Stacked Imbalance. The whole webinar was specifically for the stacked imbalance absorption, so please rewatch it. It is a very important level for me also to enter the market. It's a very strong confirmation for entering the trade, and you will be able to see it in the webinar number 5. Said, yes, this is our last webinar. I don't see any more questions. I appreciate every single one of you. Thank you so much. Right now, Angela posted the link where you can reward all the webinars together. So make sure that even if it's the first time that you are joining us today, you will still be able to reward the previous 7 webinars. During the last 7 webinars, we made a tremendous work. But let me answer one last question, and then we're going to continue into the closure. Your time entry based on the high volume node point of control, but I also read the point of control supposed to be an exit point. But the high volume node is a level where the price might reverse from. You can use it as an entry and as an exit. I use high volume node, point of control, and value areas, both for entries and exits, because if the price might reverse there and I'm in a buy and the price reaches a high volume node, then surely the price might reverse there and I'm not going to be holding my trade. So I close my trade on the high volume node as well. So that you can use it both for the high volume node as an entry and for an exit. And the same, actually, the setups from the webinar number 5, you will be able to use also as an entry, as an exit. So the order flow setups, right? You can use the order flow setups of absorption for the exiting the trade if it goes against your current trading bias. Or as you don't create the live account in ADAS, you choose your broker, you create your broker account for your live trading, you fund it, and then you connect the live account and your quotes to ADAS through the connections. So you go to the main tab, you click connections, you can connect there your live account with a broker once you set it up and fund it, and you connect it to the quotes as well. Timo, of course, you can always reach out to us. Thank you so much for your feedback. Thank you so much for the feedback. It is really important for me to hear the kind feedback from you, and really appreciate your feedback and being with us here during the past several weeks. Yes, exactly. Thank you so much for being here today. Thank you so much for being here for the past weeks with us. And I appreciate every single one of you who joined us for the past several weeks, in fact, 6 weeks. And congratulations to every single one of you who completed and who made to the end this series of webinars. You've done a really hard work, and you should be really proud. Over the past weeks, you've built a really solid foundation in volume-based and order flow analysis. Now you can understand and market mechanics behind every price movement, and how to read the footprint chart, smart tape, delta. You've learned how to read volumes and volume profiles, right? You learned how to identify entry and exit points, and how to manage your risks correctly, and how to build your profitable trading system. What should you do next after the webinars are finished? Let me walk you through by step that will help you to go from learning to implementing. First, review and practice. Go back to the webinar recordings, pause where needed, and take notes. Then switch to demo account and replay on ADAS function. No pressure, no risks, just focused repetition. That's how your real skills are built. Secondly, build your trading plan, a business plan that we talked about today. Write down your exact system. What are your entry signals? What filters do you apply? Where do you place your stop loss and target? Start with a simple framework. Maybe just 1 or 2 setups is just enough for the beginning. And you know where to enter and exit is crucial in your trading system. Thirdly, again, use replay mode to backtest your full trading system, not only one trading method. Check how your risk management rules work. Check where you can optimize it and analyze your performance. Next, refine your system based on the conclusions that you took. Perhaps you can increase your take profit or decrease your stop loss. Perhaps you can work on a better entry or implement other confirmations. Go live trading only when you are ready. Only move to the real money when your demo trading shows consistent profits and a positive expectancy. And even then, start small. Don't rush. Gradually build confidence as you scale your account. And obviously, of course, stay connected to the community. This is just the beginning. Make sure that you join ADA's Telegram community. You can ask questions to us also. You can stay up to date with the upcoming webinars and intensives. And remember this. Now that you have the tools to analyze any market through any lens of the order flow and volume, but the real success comes not from knowing more, but it comes from repeating the right things over and over, from sticking to your system, from learning, adjusting, and growing one trade at a time. A profitable system isn't built in a day, it's built in a daily process. Remember that your trading reflects your relationship with uncertainty. Learn how to manage it, and you will learn how to master the market. Once again, thank you so much for being a part of this webinar series. It was our one final session. But your journey doesn't end here. ATAS is constantly creating new educational events, researches, and updates to support your growth. So thank you so much for your trust, for your time, and your for curiosity to being here with us today. Wishing you clarity in your trading, profitable trading, and I'll see you in the next ADES event.